Ladies and gentlemen, we have another roast of everything money, and specifically Paul's obsession with Intel stock. Now, before I dive into the video, yes, I bought $500 of Intel stock. I really didn't do a lot of research, which is why I only put $500 into it. And after that disastrous quarter where Intel's revenue collapsed like 20%, and we'll see the financials in a second, it collapsed massively year over year. I instantly sold because one thing you got to keep in mind is if you're buying an individual stock and you're basing it on a certain narrative or a certain set of assumptions, if those assumptions change massively, drastically, everything you've done, all the modeling, all the planning, absolutely goes away. Why would you continue to hold on to a stock where your fundamental assumptions have changed? Now, let's go look at Intel real quick. And then I'm going to show you Paul's old analysis. And then I want somebody to explain to me why he's still invested in this stock. So let's go ahead and look at Intel's most recent quarter. And if earnings just came out, whatever, I'm not really tracking this stock. So you can see on July 2nd, 2022, well, that was the earnings cutoff date. They had negative 21% year over year revenue growth. And the quarter before that, they had negative 6.71% year over year revenue decline. Okay. Massive decline, 21% year over year. The second I saw that, and yeah, I'm not a bussy hands. Okay. I am not a bussy hands, especially when it comes to VT. I never sell VT. You hear me? But when I see something that I was like, oh, maybe they'll have flat revenues for the next quarter or two, or maybe like negative 2%, whatever. Won't be the end of the world. Negative 22%, that's insane. I'm out. I didn't do enough research. I missed something. I was wrong. What does Paul do? Seems like he keeps shelling it. Let's go look at some old videos and let's compare the assumptions here, okay? So here he is, and I don't know the exact date. It's kind of annoying it doesn't tell me. Maybe I have to zoom out a little bit. March 7th, 2022. This is actually a recent video. Look at Paul's assumptions here. He's looking at Intel, and he's like, okay, well, the past revenue growth, 1.5, 5.5, 4.5. He's circling 3% revenue growth, 5% revenue growth, and 7% revenue growth. And he has these profit margin assumptions, 20%, 21%, 23%. Can you tell me, if you had your initial assumptions, and remember, these assumptions were based on a high point, a different point of revenue. And once the revenue recalculates, the trailing 12-month revenue changes, you got to do it over again. If you had 3, 5, and 7% in there going for the next 5 or 10 years, 5 or 10 freaking years, and then you see a quarter like this, where your freaking revenue, the company you're investing in, collapses by 21%. Why, Paul, are you still doing this with Intel? Because the fundamental flaw with their software is, number one, you cannot customize it. You cannot put a trailing 12-month revenue, whatever, it does it automatically with the software, but you can't go in there and plug in a figure for your revenue, your starting revenue assumption, and you cannot customize on a yearly or even quarterly basis, if you want, what you think the revenue and profit margin will be. I'll show you exactly what I'm talking about. So if you pull up my Stonk Analyzer tool, right, and you go to the calculations, this first area right here between the two black lines shows me a potential growth of Intel's revenue. For this assumption, I had a 1% rate of revenue growth for the next 5 years. Well, you look at it, it's like, okay, Intel's revenue is going to be 74 billion, 74, 75, 76, 77, blah, 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 blah. Well, apparently something has changed because the revenue just got absolutely freaking annihilated. But with this tool, you can literally go in there and customize it. You don't even have to input trailing 12-month revenue. You can literally do like really in-depth analysis and a lot of guesswork, and you can type in what you think the next year's revenue will be right here, and you can calculate what the profit margin will be. Let's say I think Intel's revenue is going to be $69 billion for the next year. and that's million. We got 2 more zeros. 69. Okay. Well, that changes some stuff, does it? And what if I think the profit margin is going to be 5% because they're having a lot of issues? Well, that really changes my earnings per share and my buy point, doesn't it? And then let me say, oh, I think their revenue for the second year is going to be $65 billion. And I think the profit margin is going to be 7%. Well, that changes your assumptions. You cannot do this in Everything Money's tool. And if you can, somebody freaking correct me. But look how the buy point keeps changing. It keeps going down and down and down and down because they're not able to customize it. All they can do in their tool, you can't change this number, is you go off of what their tool has. And from that revenue number, you grow it out at a certain percentage point. That's all you can freaking do. And again, every freaking video, look at his assumptions. So here he had 2, 3, and 4 for 7 years. And then he had 3, 5, and 7. Something changed. When was this made? Okay, this was July 1st, 2021. But even then, 2, 3, and 4, 3, 5, and 7. Let's see. Profit margin 22, 23, 24. Profit margin 20, 21.5, 23. It almost is like he's just punching random numbers in there. Okay. And, when I first started doing stock analysis, it was like, wow, this is really interesting stuff. And then I thought a little bit more about like how you value a stock. Like if you're actually looking at fundamentals and you want to discount cash flows, and you really have to be super specific. You have to do so much research, both on the quantitative side and the qualitative side to really get a good estimate. And then at the end of the day, you could still be freaking wrong, okay? Because you're guessing the freaking future. So the whole point of this is I don't get it. Why, if Intel's revenue collapsed, would your thesis not change? I mean, that's huge. You should have freaking sold, dude. That's why I sold. But here he is still punching it. Well, I think it's going to be 2%, 3%, 4%. And that's where he's projecting his freaking his growth rates from. I don't know what to say, guys. And here's the craziest thing. When it comes to discounting future cash flows, if you're wrong on the closer assumptions, that's more dangerous than you are on the further out assumptions because the closer assumptions have a lower discount rate, and that significantly adds to your that discounted cash flow that you're including inside your buy point when you sum up the cash flows. So if you're wrong in the first year or two, like drastically wrong, like let's say there's a company that was in a bubble and had a massive revenue spike for one reason, and you're wrong in the first year, 2 or 3 of your revenue and profit margin, that is an enormous difference in your buy point. That's all I'm going to say here. I think Intel, like I said, I didn't do a lot of research into it. I looked at it, I was like, okay, God, look at the balance sheet. And like, the balance sheet and the revenue growth. I mean, it's not great, but it's not doing bad. And the profit, they still have pretty solid profits. And then I saw a massive revenue decline, massive, 22%. And then I saw a net loss. Oh my God. And then I saw now they're issuing shares, it looks like. So they go from buying back shares, being pretty freaking profitable and having, flat basically revenue growth, to massive decline, unprofitable, and issuing shares. I don't know. I don't get it, Paul. Can you explain this to me? Let's do some comments. Intel my incel. Mr. Workman comes back online. You better shout out my video, the 40-minute one on Intel. Yes, capital mindset was correct. Okay, like I said, I put $500 into it. It was like a clown investment. I really didn't do a lot of research into it. But once I saw that revenue decline, I'm out. And I lost $25 from 5 months ago. Intel also showed desperation in 2021 with their capital allocation strategy. Everybody go check out his video and appreciate the genius of capital mindset. Both Intel and Tattooed Chef are the future of vegan. Well, I'd rather buy Intel than Tattooed Chef. I'll tell you that. Strongman can't wait to get his hands on those vegan tortilla chips. Oh, God. But it doesn't matter, Strongman. He has 69 other businesses. At the end of the day, it doesn't matter. It's like the whole Palantir video where he's like, I sold some puts. Prove it, okay? And how many puts did you sell? 1 contract? See, what you can do with all these stocks is you can say you did something, or you can do a very small investment in the stock, and then you can talk about it, and people think you're behind them, you're with them. and they'll click your videos and they'll watch the videos, and you'll make more from the ad revenue and selling your software or course, whatever, than you will from your investment. Your investment could go to zero, but by God, if you got 20,000 more subscribers and you got 20,000 more people to sign up for your course, you've come out on top. Paul the Value Trap, Gabriel. Yeah, I really don't think he does a lot of research. I really don't. John Anthony Lifestyle is fighting with Alex from, yeah, I may comment on that clown show. Chris, I'm starting to think he doesn't own 9. Oh, he probably does. I don't think he's lying about that. If you're new, his name is Chris, and he's a VT investor. That's right. That is basically me. Let's do some comments. No, bro. Let these comments do you. Chicken Genius now turning into a rooster about Tesla overvalued, and Z and Putin puppet Musk. Yeah, I made a video about that. They're all gonna, all these Tesla clowns, because like, 2020, you had all the clowns, and Tesla's gonna be $5 zillion market cap, and all the other industries, all the other automakers are gonna go out of business because the average American, the average European, the average Chinese person can afford a Tesla, and that's why all the automakers' revenue is declining. It's just so stupid. But once Tesla collapses, I don't know when it's going to be. It could be tomorrow. It could be 2 quarters from now, a year from now. I don't freaking know. But it's an overvalued luxury car company with a bunch of gimmicky garbage. When it collapses, these content creators who have shilled Tesla will tear each other apart. Because when one speaks out and potentially admits they were wrong, or turns bearish on Tesla, like Chicken Genius did, all the clowns are going to attack him. You don't leave the cult. You don't leave the Tesla cult. I bet John Anthony Lifestyle is Paul's dating coach. Baba, the next value trap. I disagree, but, it went down a lot, so I can't really say anything right now. It's so funny when Paul was calling out Jeremy, both are clowns. Well, Jeremy's worse, but everything money has definitely devolved into degeneracy. Everything dead money. Oh, they're not dead. They're growing, man. They start talking about Palantir. Eventually they'll turn bullish on Tesla, watch. I mean, all they got to do is talk about clown stocks. What about comment UFC? Are you a fan? No, I don't watch UFC. Tesla is in VT. Don't you want it to shine? I'm willing to take the very small loss in my VT investment to absolutely crap on Tesla investors. I am willing to make the sacrifice. And Tesla's like, what, 0.5% of VT? Let's go look real quick. VT, the VT ETF database. Let's see. Bye. Okay, it's 1% of VT. Good Lord. Oh, look at that. Look what you own. 57% US stocks, 3% Canadian stocks, 0.56 Brazilian, China 2.3. Apparently VT is like massively weighted towards China, but I don't know. Okay, that's it. Maybe I'll do a couple more videos tonight. Live trading does great trading. Imagine being mad at a person you don't know because they said a stock you own is overvalued. Tesla cults. Yeah, they're freaking losers. Man, it's going to be my time to shine when Tesla crashes. I'm going to freaking butcher these people. But you know what's going to happen? Tesla will crash. They'll get more subs. They'll get more subscribers. Oh, I just said that twice. They'll make more money. They'll get more sponsorships. They'll just be richer. That's how it works. Take the black pill. The finance black pill. I'm afraid of dark, so play your videos in background to protect me from grifters at night. Just buy Jeppy, bro. Passive income, bro. Does better than VT and bear market. Oh, I don't care. I buy VT because I'm thinking 30 years out, okay? I was 3 years old when 30 years ago. Think about that. Anyway, that's it, guys. Have a wonderful day. Cheers.